can I use a Singapore private limited to hold shares in my investments? So basically an investment holding company. So I'll comment on the US side before we come back to you for the Singapore side. For a US side, obviously, yes, you can, but it tends to be not very tax efficient, the default, unless you make certain elections or you do something to the structure. From a US tax perspective, it won't be very efficient. And the reason why is because it triggers something called a PFIC, or Passive Foreign Investment Company. That's PFIC, for those who want to check it out. So this was a designation that was created in the 1980s in the tax code. And it basically was a response to the financial services industry in the United States that was saying that essentially a US person could invest outside of the US and experience more preferential tax treatment. So as a result of that, the PFIC regime was established, which, to be completely honest with you, it does the complete opposite. It almost penalizes US exposed persons. So this would be individuals as well as entities who create investment holding structures outside of the US. And again, there are ways of mitigating this. You speak to your tax advisor, but the default is an unfavorable treatment. And that definition of a passive foreign investment company, it's triggered by very specific thresholds in terms of the level of income. So once the level of income being operational or passive, once the passive income exceeds a certain threshold, PFIC is triggered. And similarly, when you look at the balance sheet of the company, if more than a certain percentage of the assets are held for the production of passive income, then again, it's triggered. So that leads me to what you said previously, Bunya. Are there like very specific thresholds for that investment holding structure in Singapore, given what you mentioned previously?
Okay, investment holding companies are typically very least incentivized. So basically, they don't have a lot of incentives available because if you receive dividend, they are not taxed. So all the dividends channel out to the eventual shareholders are not taxed again. So it's a first year. So that is why it's very minimum incentives available for the investment holding companies.
Understood.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.